buying oil from Russia. We're not buying oil from Russia. They're buying a lot of oil from Russia. That's not the deal.
Well, it's a belated understanding and belated affirmation of what NATO has been doing and what India has been saying all along. Geoff Dennis, independent emerging markets commentator, joining us on the show this morning. Jeff, very good morning to you. We'll talk about Fed, we'll talk about US markets, bond yields and all of that. But just a quick commentary on the observations that we've been making. Is Trump very subtly shifting the focus to NATO's purchase of Russian oil rather than the intense focus on India that we've been seeing?
I think you're probably right. And I think in truth, the story is he's focusing attention on any country, especially a large country, or a large block of countries such as NATO, such as the EU, that are importing oil from Russia. In other words, I think the focus that's been on India is now spreading wider, because the goal is, of course, to ensure that, to do the best to ensure anyway, that purchases of Russian oil come to a halt. And I think therefore, by definition, if India was the major target, so to speak, of this over the past few weeks, as that concern or that pressure broadens out to other countries, India, becomes perhaps less vulnerable at this point in time.
Okay. Jeff, in that sense, would the FII view then change on India? What has been keeping global investors from coming in? Is it largely the threat of tariffs?
I think tariffs have played a significant role, but of course, India has been underperforming all year. And the tariff, or the focus on specific tariffs and the 50% level, etc., is much more recent. I think it's got a number of things involved, and I've said this before. I think that a lot of foreign investors, they look at Taiwan, they think Taiwan's essentially TSMC, it's an AI, it's a technology play. You look at Korea, you've got real significant hopes of some corporate sector reforms. Korea's done well this year, all-time high this year, yeah. And India is really being compared to a certain extent to China. And I've got this wrong. China's done very, very well for a number of reasons, whereas India, I think, because of high valuations, because the currency has been somewhat weak, although it's really been weak within a fairly narrow range, added to now perhaps by the threat of 50% tariffs, etc. These are the reasons that the foreign investors have stayed away. But I think it's been a surprise. And I fully expect India to recover from this over time, because the fundamentals are good in terms of the potential for interest rate cuts, further interest rate cuts. As I say, the rupee is not really that weak. It's broadly within some sort of range. The growth is good. You've got some sort of fiscal, should we say, rejigging through the GST, etc. But I think those are the reasons why India's lagged behind in 2025.
Got it. Jeff, good evening. And from a markets perspective, how crucial would the Fed commentary be? And if the Fed does 25 and sounds hawkish, is that a negative for risk assets worldwide?
Yes, it will be a negative. I think most likely as the Fed does 25, I think they give very strong hints that they will do more over the rest of the year. My view for some time has been 2 times 25 over the second half of 2025. And I think it's going to be at least 2, it could be 3. So once the Fed gets going here, unless you see a further significant spike in inflation, inflation's, I think, troublingly firm, let's put it that way. But you probably need to see a much bigger spike at this point, perhaps tariff related, to persuade the Fed to cut once and then not cut any more. So I see at least 2 more cuts. And so I'd be surprised if Powell is that hawkish after the 25% cut, 25 basis point cut. I think that the chances of 50 basis points cannot be ruled out. And the argument here, of course, is that Powell has said he wants to focus on, he is focusing more and more on the labor market, which looks increasingly weak, particularly on the payroll side, employment side, as well, of course, as the tick up in unemployment. So there are plenty of folks out there who worry that the economy is sliding slowly towards recession. Against that background, because they haven't given any warning of a 50, they'll go for 25 this time, but they'll give, I think, a pretty clear steer towards more cuts over the rest of the year.
Okay, thank you so much, Jeff, for coming in there. So clearly, tariffs has been the big pain point, and that looks like it's easing. Meanwhile, in case you're missing Alex at the anchor table, no need to miss him too much, because he's found himself in London, covering of all things